Quick disclaimer, everyone, ASX trader myself and Master of the Markets is an authorised representative of ShareX Australia. This content is for general educational purposes only and does not constitute financial advice. Quick recap on me: got a Bachelor of Education, I'm a certified financial technician through the International Federation of Technical Analysis and a certified level 1 Elliott Wave from International Elliott Waves. Alright, so moving on, let's have a look at crypto first of all before we dive into the stock market. Okay, so altcoins had over 25% correction in pretty much one day, and this is what I talked about before I jumped on the airplane, because I was heading off Tuesday morning I'm over here now, and that we're at key resistance levels, and if we lost that 425, then we could see a much bigger pullback. So I talked about get rid of leverage, because if you were in any leverage position during that, you would have got wiped out. You would have got completely done. And this is what these moves do. They wipe out all the leverage longs. This is what I keep telling MTM students. The only way you can lose in this market is being too over leveraged. If you're spot buying and playing it safe, or doing really low leverage, or knowing when to get out of the leverage, then you can't lose. But if you're trying to get too greedy and trying to get rich overnight, this is what wrecks you. And this will happen many times throughout the bull market, because it happens over and over and over again. I think there were 8 to 10, 25 to 60% flushes in the market, and this is what they do. They flush it out. Okay, so I talked about it there 3 days ago, which was, as you can see, 1, 2, 3 up here, and then I also before I jumped on the plane, talked about it again here. I locked in another 40% account growth, so I had 70% in total over the last 2 weeks. Quick reminder, stay cautious this week. The charts are hinting to potential corrections. It's crucial to trade carefully, especially with leverage. Remember, protecting gains is just as important as making them. Patience beats overexposure. Okay, and this is the thing. If you didn't lock in gains, what you did was wipe out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days worth of gains in one day. So nearly 3 weeks worth of gains in one day, because you were too greedy and didn't learn to lock in gains. Lock in gains, you can always get back in again. It came down to my perfect target zone, which was the zag zone, and it's bounced off the fib 382 right now. What we don't know is that the bottom? I think it is. Okay, I think it is, and I'm betting more that it is than that it isn't. Okay, so we've bounced off, but it could do this. So going the other way now, we've had a move from here, coming up. We're at the zag zone right now, so it's looking like we might be getting through, which is good. We could roll over here and then put in another leg down to here. That's really the bearish case for it to happen, is does it come up, grab some liquidity, and then come down for another leg? I'm betting that it's not. I believe that is the bottom, but I have put in some measurements in place just in case to protect my account, and I'll show you what I've done now. Okay, here's my Venmo account. As you see, for the last month, I'm up 72.67%, and that's because I locked in a lot of those gains back before that drop. Okay, so I locked in, 43% gains on that day, which grew it up amount. So it's all about knowing when to. I also then was able to take some of those shorts to then also grow the account a bit more as well. So as you can see now, I've still got a lot of positions. I didn't close DOT. That one's still going because I had enough. I closed all the ones that I knew. Anything that I'd been in for the last kind of 2-3 weeks, I closed, because I knew if we do go down that zag zone like I did, they all would have got wiped out, which is why I ended up closing them. I've now got I've got one short still open, just in case it does have that C leg open XRP. I've closed all of the other ones. But as you can see, I've got all these other ones open right now here. I've got 24 open right now across. Okay, so you can see more here. These are the 3 I'm talking about right now. So DYDX, I'll show you, it's up 6.64. This one's 2.76, 2.4, 2.8 now. I'll show you what I'm doing. I'm targeting the zag zone here. Okay, so I've taken my entry, and what I've done is target the zag zone in case we do get the rollover. So you can see here, once we hit the target, it'll be nearly a 10% account growth. I'll just zoom out and you can see. And just in case it is a move up to the zag and a rechase, that's why I've got it there. There's confluency there in the 1.618 aligning with the Fib 500. So for me, that's a nice perfect position. I'll lock in 10% account growth. I'll then also lock in the, so I'll lock 10% account growth on that one. And then I'll also lock in, so if this one hits, again, targeting the zag zone as well, another 8.44, again, the 2.618, the Fib 618 decline resistance there, 8.44 there, and then the last one was ING. So about a 5% account growth, which is coming up to here as well. So as you can see, about close to 25% account growth off those 3 trades. What that does is give me 25% account growth, which buffers all of these other trades now. So all these other ones that I've got cracking here, which you see they've only just kind of started some of them. If we do reject that zag zone and roll over, I've already locked in that, over 20% account growth. So if these start getting hit, I would have already had the wins just in case. So that, as you can see, that's only 3 trades I've got in the zag zone. The rest are up at the, long targets. So for instance, big time, I've taken a big position and just making it up in new highs. Okay, so as you can see, where is it? Up there at 100 and something, 93% account growth. So I'm expecting this one to, you've had your up, 1, 2, 3, 4, 5 up, big retrace, and I've positioned myself in the way that this is ready to take out the high, and what I'll do is ride the market structure until it goes. Okay, so that's what the majority of the other ones are. I'm betting that this is the low. I believe it is. The data, and again, it's always about probabilities, the data is telling me that the low is in. However, I do know the data is also telling me that there's a probability of another leg down, which is why by me locking in those gains there, that'll then combat that and make it so I don't then, because imagine if I didn't have anything like that, if it does roll over, I would then lose 20% account growth because I'm too overexposed on betting this being the bottom. And again, this is where people go wrong. There's probably a lot of times where, you're right on the bounce, you're up, and then you give all the gains back because you get too greedy and you think it's a major low when there's actually more chance of it being a zag. So this is a good strategy that you can use to combat that. Is, again, in the stock market, I use the same strategy. I have 2 accounts. I have a swing account and a trading account. If I get a buy signal, I'll often put it in both. Then what I do is I take profit at the zag zone in the trading account, lock in the money, I hold the swing account. If the swing is wrong and it comes back, I get stopped out, but at least I've made the money in the trading account trading the zag zone. Okay, so really good strategy to help kind of, hedge against your swing account in case you are wrong. And this is something I identified from my data. I was really, really good at getting bottoms, but I'd often get the bottom of a zag, not the actual bottom. So I'd be right, I'd be up 20, 30% and then give it all back. So this is a strategy that I used to use for that. So I just wanted to show you that strategy so then you can aware, even if you don't trade crypto, that same strategy works for the stock market as well. And it does help to have multiple accounts to do that as well. Okay. But yeah, that's it, guys. That's what I've in. I believe the bottom's in. However, I am prepared for that. Okay, let's move over to the stock market now and see how that's moving. I thought I'd start with the chart of the week this week, and it's CNI. This is one I don't own yet, but I'll be literally buying in an hour when the market opens, and adding it in straight away. And I'll show you why I'm adding it. So first of all, you can see, as we know, the markets move in the different phases. So you can see you've got beautiful accumulation there with a beautiful spring. Okay, so they're buying there, they're buying there, they're buying there, they're selling, it comes up, and then they're buying back here again. So then you got to ask, why does this exist? And that's because it was a liquidity grab. So obviously when they're buying here, where would their stops be? All along here. So then what they do, they come down and grab all those stops for the final capitulation, and then it takes off. That resistance now, you can see, is turning into support. On top of that, you can see we've got beautiful volume increase. Okay, so off that low on the spring, you had bullish divergence. So new low in price, double bottom in OBV. And you can see we've got volume confirming this. This move down here, you can see volume's not confirming the move. showing its corrective. It's come down into the perfect zag zone here. So from here, coming down, you can see it's bounced off the 618 to the dollar, literally. And now we've had our first 5 up correction. And now you can see that move has come down on lower in volume. Reset RSI, ready to go. So to me, this is a breakout of accumulation, resistance, support, flip. And now, so I'm looking to add straight away, unless literally it gaps up in the morning, then I'll have to be a bit more strategic and try and get a pullback. But that's one that I'll be adding to my position, as soon as the market opens. So you can see why I like it. Beautiful accumulation. Things been accumulated since 2022, so June. So for 2.5 years. If you look at the sector as well, so XPJ, this is the REIT index, which is what it falls under. Same thing. It has broken out of a major resistance, and same thing, come back and testing as support. So I've also got confirmation from the sector to also say that sector's looking good. This is within the sector also looking good. So I've got confluency across multiple charts. As Dow theory states, the indices must confirm, and we have that as well. Okay, so XPJ there. FMG is still in from the other week. Still looking good here. So I am waiting for it to get above here, obviously. That's its big level. Because right now, let's break it down. That was the top. They're buying lower. They were buying there. They're buying lower. They're selling lower. So this is the point where it changed market structure. That's where you should have exited. Then you can see we're buying lower, selling lower, buying lower, selling lower. This here is where something changed. So there you've got to be like, oh, why are they buying higher for the first time? See how they haven't bought higher any other time? Lower, 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 lower. Why are they buying higher? So then what we want to do is if it can break through here, you then have to ask the question, why aren't they selling lower anymore? So the minute it even gets $1 through there, they're going to be selling higher. And that becomes a change of market structure, which then means we should be going to at least back to the zag zone, which that's the 382, which for me would mean around this 618. So we should have a nice clear run to at least there. And that happens to align perfectly with this major resistance support. You can see there. So old resistance becoming support. And then be keeping on that Fib 500 zone there as well in case the decline gets rejected there. So I'll be eyeing off that 23 zone. If it does change market structure on the day there, I'll be looking at all there. They're going to be my targets for my trading account. I've got this again in the swing account, trading account. So trading account, I'd be taking profit if I get rejection here or here. Swing account, I would hold until I get a change of market structure again. And it's as easy as that. So, there's a really good chance that the bottom's in here. You've got two things that are going to happen. That's your B wave top there, which you can see, which is one I talked about a while ago while it was bearish. You can see we rejected the 1.2. Let me get rid of this. You can see we rejected the B wave pocket zone perfectly there, the 1.272 to the dollar, and then it came back within. So what we hope this is your 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So it's whether or not that counts as the 4, 5, or this is the 4, and then we get the 5th. That's the thing that I've got to be prepared for. Okay, so again, why I probably take money in the trading account here. If it gets above here, then we're good because wave 4 can't enter wave 1 territory, and that's where we're good. So the minute we can get through that kind of 2350, then we're looking pretty. All right, so keep an eye on that one. And if it does take out this low here, then we are going to get another leg down to probably around this $12 zone, and that is where I'll be looking to buy. So this was my first potential bottom, taking a go here. If it doesn't, we get the ABC, and then we come down for one last low. But yeah, FMG, looking at XMJ was the sector I talked about last week to keep an eye on. You can see we've bounced off. So let me have a look, show you. Okay, so I talked about last week bouncing. We did bounce. Bounce up the Fib 618. And look at the weekly candle that we had last week. So nice bounce up here. Change of market structure. We've got back through this level here, which is really good. Okay, I talked about the fact that this being a triangle means it's a B wave. Okay, A, B, C, D, E. So wave A, B, triangle, C. Triangle cannot happen in wave 2, which is why I knew that was corrective. Now we've had the bounce off the zags on the 618, and we're changing market structure, which also aligns with FMG still looking good as well. So yeah, FMG still looking really good, and materials should head higher from here. Once we get above here, then we are on go time, because then we have a change of market structure on the materials sector. Okay, so you can see there, that's the top. Nice little A, B, C, and you know, buying lower, selling lower, buying lower, selling lower, buying lower, selling lower, buying lower. Why they sit buying, selling higher? They were selling down here before. Why they buying higher? And then that would be the change of, that would be what's called a non-failure swing, which is a really strong reversal pattern. So looking for that, and then what would that be? That would be a reversal pattern through and likely break out to new highs. So materials sector looking pretty good here. If you start looking at a few things, a couple of guys I said in MT on the weekend was gold's looking good. Okay, and you can see here, we bounced off our zag zone here and back to change market structure again right now. So gold looking good there on really good volume coming in. If we can close out above that 7230, then we're back in business again. Same with silver. Silver bounced off the here, double bottom. As long as we don't reject here, okay, you can see sellers were here, sellers were here. We don't want sellers again. So if we can get through 33, that shows you sellers are exhausted. This was just a nice 1, 2, 3, 4, 5 down to the zag zone, and then we continue higher. So yeah, a lot of people freaked out on this. That's how markets move. They zig and they zag. They zig and they zag. Look, zigzag, 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 zigzag. That's how they move. So like I talked about the other week, 3 steps forward, 2 steps back. 1, 2, 3, 2 back. Okay, same thing here. 1, 2, 3, 2 steps back. Okay, that's how the markets move. If you can't handle the zags, you do not deserve the zigs. All right, so keep an eye on that, your materials, silver, gold as well. See if they start hitting it. So going on from that, a couple of the ones I talked about, RRL, bought the retrace on this one. So here, so that one's looking good. It's broken out of its accumulation, come back, tested resistance at support, and now taking out the highs. So Regis looking really good. And on that one, on that retrace there, Gore was the other one I talked about. Same thing, bounced off the zag zone here, broken out. And if I zoom out to the weekly now, you'll start to see that we have broken out that weekly breakout like I talked about. So really, really strong breakout on Gore there. That's a 4-year break on really good volume. So really strong breakout on gold resources, which is a good mid-tier gold producer, which as we know, gold has been phenomenal. And this one is now breaking out of that 4-year base. So beautiful, beautiful chart there. Got on off that zag zone there, ready to go as well. Now the one to keep an eye on is that SYR. I know I talked about a couple of weeks ago here when it was, so you can see here we're in this falling wedge here. Still waiting for it to break out of this wedge. So we haven't gone yet. So yeah, just if we can get that, depends if it puts in a high low here, if you can get up through that 32, keep an eye on that, because that would be a change of market structure out of your falling wedge, down back at your COVID low prices here. Okay, so still watching this one, still think it's got potential there. Tolga Group as well, waiting to see if it bounces off this level here as well. So it came back, I'll go to the data, you can see, came back and filled that gap, whether or not buyers are going to step in here. So if it can pivot off here and then get back above this level here, then you've got a nice double bottom off your gap fill here as well. So keep an eye on that one still as well. And let's end with NVX, the dog that was looking so darn good, and then did the capital raise. So I think it's done an expanded flat now. So 1, 2, 3, 1, 2, 3. This is your C wave. This is my target, and this is where I want buyers to step in. So I'll be looking right now to see whether or not buyers step in here, and we want them to go in here. If they does that, that's fine. That will be extremely bullish if we pivot off here and change market structure, because after an expanded flat, you get absolutely massive, massive moves. So yeah, just keep an eye on that, but we need to see it pivot and change market structure off this 60-cent zone there. Okay, all right guys, I will leave it there, but like I talked about, CNI chart of the week looking really good. Keep an eye on that materials sector as well, and hope it helps. Take care everyone. If you liked the video, please like and subscribe and share the love. Thank you.